Hello, crypto traders and enthusiasts. Welcome back to Tokenomist Daily. This week's global market spotlight will be on US jobs data and inflation figures, both crucial indicators shaping the Federal Reserve's next moves. Let's go through this week's key economic events day by day. On Monday, December 15th, two major Federal Reserve officials will speak. Governor Stephen Moran and New York Fed President John Williams are scheduled to deliver remarks. Markets will be listening carefully for any hints about the Fed's outlook on interest rates and economic growth. Moving to Tuesday, December 16th, the U.S. November jobs report takes center stage. Analysts expect an increase of 50,000 jobs, down sharply from the previous month's 119,000. The unemployment rate is expected to tick up slightly to 4.5% from 4.4% last time. These figures will give investors a clearer picture of how the U.S. labor market is cooling as the economy adjusts to higher borrowing costs. On Wednesday, December 17th, we'll see a trio of Fed speakers, including Governor Chris Waller, New York Fed President John Williams, and Atlanta Fed President Raphael Bostic. Their comments could influence expectations for the next Fed policy meeting in early 2026. Thursday, December 18th, will be a big day packed with major releases and central bank decisions. In the US, weekly jobless claims are forecast at 223,000, slightly lower than last week's 236,000. But the spotlight will be on inflation. The December CPI reading is expected at 3.1%, up a touch from 3.0% previously. Core CPI, which excludes food and energy, is forecast to remain steady at 3.0%. These numbers will be key to determining how long the Fed keeps policy restrictive. Meanwhile, several global central banks will also announce their interest rate decisions on Thursday. The Bank of England is expected to cut rates by 0.25%, while the European Central Bank is likely to hold steady. Over in Asia, the Bank of Japan is projected to raise rates by 0.25%, signaling a gradual policy shift away from years of ultra-loose monetary policy. Overall, this week's combination of US employment, inflation data, and global rate moves could set the tone for markets heading into the final weeks of 2025. Stay tuned for all the updates here, and don't forget to subscribe for more market insights every week. Thank you.